Hey, good morning, everybody. This is Chris here in Hawaii doing your London close trading session here for the 11th of May, 2020. Hope you all had a great weekend here. Let's kind of get into it. So we'll kind of talk about sentiment. I'll talk about some trades that I carried into the weekend, which I usually don't like to do. Uh, but definitely close them out before the London Open, and then we'll take a look and see if we have anything tradable for today. So, um, over the weekend, nothing crazy over the weekend. Some anti-China rhetoric from the U.S. Also, Vice President Pence's aide came down with coronavirus for the U.S. So that definitely, had a negative tone to it. The U.S. dollar nudges higher, though. Everyone's kind of awaiting Fed chairman comments that's coming midweek. The anticipation is that the U.S. might go to negative rates, so I think there might be a little bit of market pricing on that. Canadian dollar did slide, so the market did start off a little bit more of a risk-off mood. The euro is a little bit lower. The pound underperformed today throughout the session with Prime Minister Boris Johnson's address. It was a little bit mixed in terms of his messaging, so markets weren't really able to make much of it. The Brexit talks are resuming today. The yen obviously is a little bit stronger, but there was a little bit of a pushback on the dollar, U.S. dollar. So for the U.S. dollar was bid this session for some reason. And then the Aussie Kiwi were down, and I would anticipate the Aussie being down too, just with the China rhetoric. Also, there was an announcement yesterday on China imposing tariffs on Australia, so that would weigh for sure. So markets are a little bit more defensive to start the week. Equities are off a bit. Nothing crazy though over the weekend. Once again, the only positive was that Chinese authorities promised to take more powerful measures to boost growth. And then Prime Minister Johnson's talk on being real cautious on increasing economic activity. So that kind of gave us a mixed start to the week. Equity-wise, like I said, the Dow's down 200 points. The VIX is up slightly. So that is interesting. I think the headline on CNBC is Dow falls 200 points on reopening doubts. So you can kind of get a good feel for sentiment. Just browse through some of the free sources out there. I really don't like to pay for services unless I absolutely have to. But Forex Live is a great free resource. CNBC is a great free resource. You can also go to Zero Hedge, and that'll give you some good headlines on what's going on in the market. So, like I said, scrolling down through Forex Live, I don't really see anything extra after that morning breakdown. It's all technical jargon. Just, Canada announcing new measures to aid businesses impacted by COVID-19. Okay, that's good. Technical briefing strategy. So, U.S. is the strongest. Aussie's the weakest for the day. Let me take a look here and see. There's this cool little breakdown that they do every day on Forex Live that kind of gives you the what's what. I mean, U.S. dollar is up 4% in terms of cumulative changes. So dollar, then Swiss, euro are up, Canadian dollar, yen, pound, Aussie, Kiwi. So it's definitely commodities getting beat up a little bit, but Canadian dollar surprisingly is remaining pretty strong. So you can kind of see it's a real mixed heat map going on into today. So the only thing that's really firm is The Kiwi you can see is down across the board. US is up across the board. So here's the interesting thought. US is up across the board, but there's no real big reason for it, right? And then the Kiwi's down across the board, no real reason for it, other than just anti-China rhetoric, which I guess would impact New Zealand. But the Kiwis reopening their markets and reopening their economy, and they're doing it faster than most other people. So that would bode well positively for the Kiwis. So what I think is going on is I think this is being sold off to start the week to shake off weak investors. So I'd be interested in looking at the Kiwi US for a long, if we can find a good level here. So that's what I'm going to be looking for. I'm looking for Kiwi longs today, based on the news, what's out there, what's going on. I think that would be a good, safe bet to go long into today. Maybe even an Aussie Kiwi short would be a nice little move here too. There's a nice level at 106.81 that I would be interested in. All right, well, let's take a look. So first off, let me pull up the charts, and we'll talk about the trades we had Friday. So I had two trades going on. I had a Euro US and I had a Euro pound, both short. So I was real short on the Euro. So I felt comfortable about holding that in the weekend. I didn't think there would be any positive Euro developments going on. And you can see here, it's headed towards that target. But you know what? Going into London Open here, which was about right about here, right around this level is where I took profits, just because I really don't like holding into the London session, because that's when I sleep, and this is more of a day trading strategy, so it's not something that I like to hold. Even holding on the weekends, you kind of open yourself up to a little bit more of a risk. So, but it's gives you extra confidence. You can kind of see the analysis, playing out, and that for me, gives me the extra confidence in just knowing I picked the right direction. The other one was so I took, I think, a little bit over a 1-to-1 on this one. Wasn't ideal on the reward to risk, but holding over the weekend, I really was nervous about doing that. So this one, on the other hand, you could see it just went way the heck out of here. But I actually got out right around here, I believe it was. So a little bit better than break even on this one, and I would have gotten stopped out holding it for the London session. So, it was kind of a mixed day, but overall it was a net profit for the Friday trade. So that's the interesting thing about Friday is you can have big moves on Friday and reversals, which is kind of what I'm looking for. But if it holds over the weekend, it doesn't really move a lot. You kind of want to get out, because there's a new tone for the new week. And like I said, I don't advise holding on the weekend, but so much can happen, and price can gap on you to the point where your reward to risk goes out the window there. So like yen pairs, Swiss franc pairs, I would really be hesitant holding that kind of thing over the weekend, just with the gap possibility, and your 2% risk, or if you're conservative and do 1% risk, that can go into like a 5 or 10% loss if you hold it over the weekend, or even more. I mean, if you kind of go back, I hate to use that Swiss franc example from a few years ago, but I mean, it can happen that fast. So you have to be very, very cautious and protect your equity here. So that's kind of my 2 cents for the day on stops and holding for the weekend. And Once again, the reward to risk wasn't ideal going into London Open, but I didn't want to hold it, and I'm not going to stay up all night, thinking about these trades. And you don't want to do that, guys. I mean, I know some of you trade on your phones. I do too. And I that's where I monitor my stuff so I can be mobile. But I don't like to. I don't like to hold my trades overnight because I like to be able to sleep. And really, my methodology for how I trade, it's based on a reversal from the London close time. So this is a very nice level here. Let me see the volume. So once again, this is a really, really good opportunity in my opinion. I don't think the dollar is so you can see a level right here. And it's dropped below that. You see this little gap here, and then there's more volume down here. So there's a nice little support base right here at 63 or 61. So this is an interesting move here. I wonder if there's a level. So, that's really, once again, what I'm looking for is I'm looking for sentiment in the market that doesn't make sense, and a move in a direction that to me is overstayed its welcome. We'll just say that. So I don't see. I'd feel more comfortable. I'm trying to look for levels, but I'd feel more comfortable if this line was like right here. To me, that would be ideal because that I would feel more comfortable on the protection here. You're looking at maybe 70 to maybe a 45 pip profit target and like a 10 pip stop if you take this trade here. So that could be a nice little move. Like I said, the level for me isn't particularly strong, so that's the only concern I have. Is I like to see like a nice like pivot point or something like that. You can see what's the traded levels here. So there's some volume here at 106.82, and it dropped below that. So it kind of makes me think that it's going to try to go down to the 50 level. Markets tend to go to major levels, so like 50, 80, 20, the round figure. So it's early on in London Open, London close. So the fix was at 5 a.m. my time. So that's 4 p.m. London time. So I'm gonna let this bar play out here before I get in on any trades. But I'd like to see what the Aussie Kiwi looks like. See, so like this one is a good little move here. You see the spike up, some volume. There's some definite volume down in here, right here. But this 80 level is pretty solid. I mean, look at this. There's a build up of volume right here. You can see if you take this leg down right there. You see that? That is a level I'm interested in. So I'm actually going to go in on this one here. So this is like a 10 pip stop, and I would target down in here. So we're looking like a 50 pip. I'm going to target 106. I think this will move down further. So let's get in on this one. This is a 10 pip move. So you want to put in, I'm going to my risk calculator, guys. So you always want to make sure you define your risk. So for me, it's 2%, and that's pretty aggressive. That's pretty dang aggressive here. So that's That's my risk. So most people, 1% is kind of what you want to do. So 1.2. So let's get in on this one, and we will take it for a ride. 1, 2, 1. All right, we're in, guys. So we have a Aussie Kiwi. So that would prevent us from going Kiwi US long unless we're really feeling strongly about it. Because you don't want to be exposed to any one equity too much here. So I'm going to set a hard stop on this just to be safe. And we're going to target 106.05. So if it gets above 106.80 and closes above that, we will close out. All right. So go into the chart here. Let's set our order. So we got filled at the right here at 69. So stop is that's 180 there. So you see this nice little volume build up right here. That's our protection. And there's a lot of orders in there. So that will, like I said, that's what you're looking for when you're trading this stuff. Is you're looking for those levels that offer you some type of protection, give you a higher probability of being profitable here. So let's set our parameters. So 106.05 is our profit target. 106.80 is our stop. And that gives us a 5.88 reward to risk ratio here. So that's a nice little move. Once again, you see some volume down in here, but this is weak volume for me. And I think Aussie's a lot more exposed to the China-US rhetoric than the Kiwi is. I think the Kiwi economy is going to open up a little bit faster. So this is a nice little trade for us. And we'll see how it goes, guys. So we'll stick with this for now, and I'll keep it open and see how it plays out. So any questions, hit me up in the member area. All right. Thanks, guys.